Well, you know, it was a good day for the market. It saw all of the sectors in the S&P 500, all 11 of them trade higher, led by consumer discretionary and financial names, which, by the way, could get an extra boost after the bell. We heard that Warren Buffett hiked his stake in Goldman Sachs by 21%. Now, I think the market really is set up for a balanced portfolios really nicely. I mean, I think you could score big still with these momentum names, particularly breakouts. Golly, I mean, these stocks are going parabolic. But don't forget about value. There's a lot of great value out there. I know there's a lot of boring names, but consider that the risk-reward levels really are very favorable. On that note, I like the action in industrial names today, and at some point, material names are going to gain some traction. I think everyone should have some exposure toward packaging and even dull chemical names. I want to bring in now to discuss Dory Wiley, Commerce Street Holdings CEO, and Erin Gibbs is back with us as well. Dory, I read somewhere that you were coming into the summer, you were a little, I wouldn't say bearish, but you were certainly a little worried about the market. How are you feeling right now after this earnings season?
Well, I'm always, I never get full-blown optimistic, so we'll call it guardedly optimistic. But the markets trade sideways all year. Earnings are up 25% for the year. We've got nothing but good news. And so it's a great, as you were pointing out, it's a great stock pickers market for value, and there's some great names in large caps and mid caps. What
about some of these names that keep Amazon up almost every day? NVIDIA was up big. They're going to report this week. If they get a big number, that stock is going to go significantly higher. We know some of that's passive investing, billions and billions of dollars chasing the same names. That makes some people worried. But is there a place there in your portfolio for some of our viewers to also be there?
Absolutely. And I think if you pick your spots in the FANG stocks, you know, get rid of Netflix, pick the ones that are making good money and have some margin. Apple's doing very well. Google's doing well. Amazon's doing well. Underweight the other ones. But look at retail. Retail was up across the board today. Macy's is up 60% this year, and you still get above a 4% yield, a 4.5% yield. The comparison I like to make is, you know, Tesla has been the sexy stock on the market, yet it doesn't make money, doesn't have an EBITDA, isn't making its production goals, and we all know the problems with Elon Musk. But if you look at Ford, Ford just made 10 million Mustangs since 1954 or 1964, and if you look at that, they not only know how to make a car, but they know how to mass produce them.
Well, are you worried? I'm going to come back to you. Let me bring Erin into the conversation, but I will come back and ask you about peak auto, the death of the American automobile market, and again, Ford could be great looking on paper, but if no one bids it up, that's a problem. Now, Erin, you also like a value play here. You like Coca-Cola.
Yeah, so opposite of a FANG stock, but one of the main reasons is Coca-Cola just bought Body Armor. It's a sports drink that's mainly owned by or started by Kobe Bryant. It's meant to compete with Pepsi's Gatorade, and that's one of the areas that they haven't really been able to compete. So I think on this news...
What about the carbonated beverage decline? You know, 10 years ago, diet sodas were picking up the slack. Now people have written them all off. I think they got to make an acquisition in water.
Well, they do have their own waters as well, but this is exactly the same point. Is they've got to diversify away from soda, and these types of acquisition, they're cash rich, they pay their dividends, and this is exactly the type of strategy we want to see. So this is where I see that being a good point.
You only make changes in your portfolio periodically. Yep. But someone out there watching this market, if we break out to new all-time highs in the next couple of weeks, would it be okay for someone to chase some of these names that are already up big?
Yeah, we still like Amazon. We still think there's room to run. Right. You know, it's still one of the most profitable consumer discretionary names out there, so we don't have a problem with you know, even at these valuations.
Dory, I will tell you, I personally have been killing it on the brick-and-mortar retailers. Every now and then I get to pat myself on the back because I told people to buy them this year when nobody liked them. But with Ford, for instance, how long would someone hold a stock like Ford that has the obvious value that you talk about as they're watching perhaps an NVIDIA go up 40 points on its earnings report?
I can't help but think that Ford is tied to Tesla, because Tesla is the sexy stock and Ford is the boring stock. But all Ford does is make money, and they're doing great, and they got a nice yield to it. So at some point it'll come back, especially if Tesla continues to experience the woes that he's had. But there are other opportunities out there in big banks, and I've been touting that all year on your show as well. You know, Bank of America still looks great. It's under 11 forward PE. It's got a nice 2% yield, and they've got great funding and great expansion opportunities as rates rise.
All right, thank you both very, very much. Really appreciate it.